Hello, everyone, and welcome to the Financial Dads Podcast. My name is Paul Fagan, and I'm here with Jody Fisher. Hey, Jody, how you doing?
Hello, Paul. How are you today?
Fantastic. This podcast is for all the dads out there who struggle with life's topics as they are related to family and finances. Our hope is that we can provide our thoughts, successes, and mistakes and share them with all of you. Today's topic that we're going to discuss is banks and fees. And actually probably a little bit beyond banks as well. We'll talk about maybe some other corporate entities, but predominantly talking about banks and fees and the pitfalls of dealing with banks and other financial institutions. I want to actually have one side note that I want to just say here. A friend of ours, Jody, a mutual friend of ours, heard our podcast, one of the episodes, and he heard a garage door opening in the background.
That's
right?
me, guilty. I do mine from the garage.
And I think that's what he said. And what I wanted to make a point of is we are truly authentic, right? We are dads that are locked in rooms or garages with the kids running around outside, stealing 30 minutes of time, right? So we're truly authentic. So when you hear those brief disruptions or garage door openings, you know that we're not in some stuffy studio somewhere going through this. We are doing real-time, real-life podcasts as real financial dads. So I just wanted to add that.
Couldn't have said it better. Yeah, this is real life. We're not pretending, like you said. We're not in a studio. We're not. This is not perfect. This is real life.
Yep, absolutely.
And by the way, thanks to that mutual friend for listening to our podcast. We appreciate it.
Yes. We appreciate anyone who's listening, and the subscribership is growing a little bit at a time, so we appreciate it. Thank you, everyone. I'll jump into my current situation when it comes to banks and fees and the gotchas and the pitfalls, right? So the story that I talked about on a previous podcast was around a credit card account. Banking error. I put the payment in on time. The bank had a delay in issuing that payment to the credit card provider, and I got hit with the late fee and the interest, which I hadn't paid in decades. I called them up, fought with them, and they would not make that change. So I actually put them on speaker, pulled out my scissors, I cut the card, asked them to close my account, and I hung up.
You did it right there with them on the phone?
Yes,
that's awesome.
That's how mad I was. And you know how much the fee was? You know how much the total?
That is such a gangster move. That is awesome.
Yeah, and so, it was just like, I'm done with you guys. I think maybe the late fee was $25. The interest was like $2. Because if I remember correctly, it was a credit card that I used to use for eBay. And the charge on it that was late was like $35. So the whole thing was obscene. It should have been wiped by the credit card company. Like any logical person would have seen the situation with my supporting detail and the dates that I provided and the bank records I had, and they would have easily, if they were able to think on their own, they would have easily wiped it away, right? But they didn't, right? And I think I did try to escalate, but I got to the second person, and that was of no help, and that's when I was frustrated, cut the card on speaker, asked them to close the account. And it's funny, they still send me mailings for credit cards. It's the funniest thing.
I'm sure they do.
Yeah, it's the funniest thing ever.
And you know what? They probably let you go as a customer, even though in our brains, it doesn't make sense to let a customer go. In their mind, it's like, who cares? There are 50 suckers in line behind you who are going to pay our stupid fees and going to pay our high interest rates. So we don't care. See you later. Because you know what? In a year, you're going to come back around. And that's why they keep sending you mailers.
Yeah, they figure at some point I'm going to bite. But I shred each and every one that I get. Someone told me I should just fill it out and send it to them and just put and fill it out in crayon and kind of send it back to them and waste their postage. But there's bigger fish to fry and there's bigger things to do. So that's my major example. Another example that I have was a big screen TV I bought from a major appliance and electronics chain. And I fell into that trap of the finance at 0%. But when I read the legalese within the contract, they had the right, if you miss a payment, that they can retroactively go back in time at a rate of like 22.5% and charge you all that back interest.
Wow.
which was amazing to me. And so I treated that going forward with kid gloves like I was handling a snake. I know Dave Ramsey uses that reference, but I really was looking at this like, I need to pay this off as fast as possible, get them the check, get this done, because I really took the financing out for the warranty, because I figured I get 0% for a couple of months, and if there was something wrong with the TV, I would have I would have some leverage. That was my goal on it, to kind of hold it. But I then quickly realized that the TV's fine. Let me get out of this potential trap of interest and move on. So I paid it off, which I always intended to do, but it was just another case of didn't realize what could happen if you're not reading the fine print, or finance companies and banks that are willing to just prey on fees, right? And if you read stories in the Wall Street Journal and on Google, and there's a lot of the revenue that the big banks get are from these fees. But those are my two particular situations. Jody, how about yourself? Any mistakes and such in terms of or issues with banks that you want to talk about?
Boy, mistakes. How much time do we have? We could do like a week-long podcast on financial mistakes. And that's why we're here, right, Paul?
Yes. Yes.
And trying to take the mistakes that we've made, and we've all made them, but try to take the mistakes that we've made, maybe pass along some of the learnings, so other people don't make those mistakes. I have made mistakes with home buying. I've made mistakes with credit cards. I've made mistakes with banking and banking relationships. I've made mistakes in budgeting. You name it, I've done it. And it's given me this approach to what we've talked about in the past, approach to money, which is being intentional with your money, making sure that you have a handle on your money and what you're doing with your money at all times, regardless of how much you have, regardless of what you're doing with your money. Make sure you know every move, like chess pieces on a chessboard. Make sure you know every move you're going to be making. That, and being smart with your money, being intentional with your money, is figure out how you're going to win. The other way I approach money is, look, you're going to make mistakes. I've made a ton of mistakes. I'm sure I'm going to make more mistakes in the future. You can't hate the mistake. You've got to hate not learning from it. Because if you don't learn from the mistake, you are destined to lose. It's guaranteed. It's like, burning your hand twice on the same stove. Figure out that the flame is hot. Like you were talking about, Paul, with that 0% credit card. You made that one mistake that one time, you're never going to make that mistake again. And I've been in a similar situation. I think we could probably get into sort of questions that you can ask. It's tough to know what you don't know, right? Mm-hmm. Maybe we can approach it this way. It's tough to know what you don't know about making decisions with money. I'll use the example of when we bought a house several years back, the one before this one. It was a new construction house. It was built on an empty lot. And I think I may have told this story before, but I'll tell it again. New construction house built on an empty lot. Taxes were extraordinarily low. And I was like, oh, this is great. I didn't know that the reason the taxes were extraordinarily low that year was because the taxes were assessed on an empty lot. And year two, the taxes, I think, doubled or more. And into the tens of thousands of dollars. And I'm like, holy, what is this? And I only found out later it's because of the empty lot situation. I didn't know that. And I didn't even know to ask that question. So what I feel like I should have done was ask somebody, hey, what do I not know about this? Or what's going to change about this in a year? Or how is this going to be different down the road? If you ask a professional who's involved in the transaction, if I had asked my real estate agent, if I had asked my bank, if I had said, tell me what I don't know, they would have been like, oh, you're fine, you know everything, or whatever. They don't know what you don't know either. So you've got to prompt them. You've got to pull this stuff out like teeth.
Yeah, you've
got to ask them questions that prompt them to think a little bit, and then give you the information that will help you make better decisions. Again, you're still going to make mistakes. But asking questions, relying on professionals, and then and then making your own decision based on the information you have, I think is the most important thing you can do to try to avoid mistakes.
Yeah, that's very well said. And I think that really, I think the name of this podcast is probably Financial Pitfalls, because I think we're going beyond banking and fees, which is great because I have two similar stories when it comes to real estate. Luckily, they weren't by me, right? I didn't make these mistakes, but we live in a town where there's two different school districts, and there's the Rye Brook School District and there's the Portchester School District, and there are houses in town where you can have a Portchester post office with a Rye Brook school system, or you can have Rye Brook schools with Rye Brook address, but more importantly, you can have a Rye Brook address with Portchester schools. And what typically happens is people want to buy in Rye Brook for the school systems. They read about the school system online, and they want to come to the Rye Brook school system. The other school system is fine, but not as fine, I would say, survey-wise than Rye Brook. But I've met people in parks and stuff, and it's happened at least 3 times, where people have bought a house thinking they bought the house in Rye Brook. They go to put their kid into the Rye Brook school, and they're denied because they're zoned for the Portchester school system. And I'm wowed by it. And I'm even more wowed by it because I've heard the story at least 3 times. So in all these transactions, nobody bothered or to check on the school system, right? Everyone just assumed something, right? So
well, and that's amazing to me too, because anyone who's ever bought a house knows that one of the top things that a real estate professional will tell you is, "Oh, great schools, it's the blah 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 school system."
Yeah,
no one ever even brought that up.
No one ever brought it up with these 3 particular people. I'm telling you.
Like, how do you buy a house and not ask that question?
That was amazing to me. The other story that I've heard is I had another friend that, similar to you, Jody, they were buying a new construction home, and they were working through their mortgage company. And the mortgage company traditionally wants you to escrow your property insurance and your taxes through them, right? They make money off the float, so typically when you go to get a mortgage, part of the servicing is that they would like to do the escrow and pay the taxes for you and pay the insurance for you as a convenience. But in reality, they're making money on that, right? They actually lose money when they don't get to do that for you. What's interesting about that is this person bought the house and said, "Okay, mortgage servicer, I trust you. We will let you escrow the taxes and pay the insurance." So the good part was they did pay the insurance. The bad part was when it came to escrow of the... no, I got to correct this. There wasn't a good and bad part. It was all bad, Jody. I take that back. It was all bad. It was all bad.
It goes from bad to worse.
It goes from bad to worse. I'm sorry about that. So real estate taxes wound up being about $12,000 for this home. And I would say that the home insurance is maybe $2,000 a year, $1,500, $2,000 a year for the homeowner's insurance. So over the course of a year, the mortgage servicer escrowed $10 for the entire year because they miscalculated everything. So my friend was on the hook to come up with $14,000 with immediacy.
Man. Yep.
Now, in all fairness, that person probably should have done more homework to look at the statements, see what was being done, etc. But at the end of the day, I don't think it was malice. I just think it was pure stupidity and error that this happened. So once again, this comes back down to being your own advocate. You really have to read the fine print. You have to do your own due diligence. It's almost equivalent to if you have a family member that is sick, the same rules apply. God forbid a catastrophic illness. That person has to become their own advocate, or a family member has to become their own advocate, to take the notes, to do the research, to do the Google searching, to look for doctors, to follow up on test results, all those different things. You could apply those same rules to finance, right? You really have to be your own advocate, because if you're going to rely on mortgage companies and credit card companies and other large banks to handle that for you, you might be in trouble.
Yeah, absolutely. I mean, let's be honest about this. And I'm not trying to bang banks, but I'm going to bang banks. Banks are not benevolent, right? They're not there. They say they're there to help you. They have great advertising. So, oh, it's your bank and it's a community bank, and we love you so much. They don't. They love your money, and they want more of it. And to be fair, they're in business to make money, but we'll set that aside for a minute. They're not going to help you keep your money when their fine print says that they're entitled to it. So you have to your point, Paul, read the fine print, make sure you ask the right questions, make sure you're intentional with your money and your budgeting, and don't walk into the mistakes and the traps that have been laid before you, because they're written in 6-point font.
Yep, absolutely. And I know that from my perspective on all the things, I'm very careful when doing transactions, but once in a while I'll get caught, right, in some sort of bear trap, right? The good part is, if you get caught in one of those bear traps of finance, the key thing is stay calm, assess the situation, realize you may have to take a hit for some, like I said before with my late fee. It just happened. I trusted a couple of institutions to do the right thing. They didn't do the right thing. And then learn from those mistakes, right? Do your proper escalation on those calls to see if you can get the issue resolved or get the fees wiped away. But for the most part, just you have to learn. I think you said that. Yeah, you said that early on in the podcast. You have to learn from those mistakes. You have to make sure that you're not repeating the same mistake twice. I know on a past podcast you talked about the closing of accounts, which was interesting. When you were transferring, had too many transfers. That was very interesting. And was that between the same bank or between two different banks? What was that?
Nope, that was within, and I won't name the bank, but it was within a single bank. And this is a big bank, because the other thing I wanted to just quickly touch on is that for the most part, the frustration that we're venting here is about the big banks, the impersonal banks, right? We also bank with a credit union that is nothing but wonderful and gives us an extraordinarily high interest rate on our savings accounts. So to the degree that you can, I would recommend people check out credit unions, because they can be wonderful institutions, and the experience we've had with the one that we use is tremendous. Going back to the transfer hit, this was a transfer back and forth between a checking and a savings account within a big bank, and the direction was I couldn't exceed, I think the number was 6 transfers in a given 30-day period from the savings to another account. And in this case, I was transferring money from savings to checking. And the way my budget is set up, that's what we do. Weekly, we transfer a certain amount of money, a set amount of money from the savings to the checking to cover bills and blah, blah, blah. And we build up that savings account as we can. And so I exceeded whatever the number was, 6, the number of transfers from savings to checking. And on the 7th one, I got the automated message within the banking app, and then a letter home that follows up, because they follow up with hard copy, saying you have exceeded and we're automatically closing your account according to federal law. Now, I never bothered even looking into what federal law it was, but I went into the bank and I was like, WTF? I've been banking here for 15, 20 years. What do you mean you're closing my account? And the woman who was there, who was very nice, said, oh, don't worry about it. We'll just open you a new savings account. And I thought to myself, that is so stupid. Like, either the federal law is stupid, right? Because it's my money. I'm just moving it from one account to another. 2, the federal law sets up a situation by which you are constantly opening and closing accounts. That's wasted energy. Unless somebody's, and I'm sure, unless somebody's profiting off this in some way, this just seems so dumb. Now, the only reason that I kept it there, it was because it took me 5 minutes to open a new account. And they didn't take away my money, obviously. They just closed the account. And they didn't shift the money anywhere. And then I just went in 5 minutes. I opened a new savings account. They shifted the money over to that new savings account. Once it washed out of the old one and that balance was zero, boom, I shut that account down off of my profile and it was gone. But it just seems so ludicrous. And of course, when you get that note in the mail, like, you get that notification, we are automatically closing your savings account. Like, really? And you want to pull a gangster move that you pulled with the credit card company and like call somebody up and pound them and then clip the card up so they can hear it.
Yeah, that's probably. I mean, it's interesting. The amazing and I've done this too. And that was probably the one time where I did cut ties with the bank. But a lot of times, these big financial institutions, like you said, they have this idea of stickiness where you stick with them because, like you said, they're just going to give me a new account and my money's already there. If they give me my money, I have to go find another account, and go to a new institution. And
what I was thinking too was that, then I got to reset up my direct deposit and I got to do all the bills and, you get entrenched in an institution. And so it's more trouble for you than it is for them when something like that happens.
Very true. And that's why me and my wife, we have, and it goes back to I've said on another podcast, where we actually still cut physical checks to each other for the monthly expenses because our joint account is with Bank A and our personal accounts are with Bank B. And when we try to do a transfer between the two banks, inevitably there's fees on both sides for the transfer because you're going to another bank. It would have been easier many years ago to consolidate the joint checking into one. But for some reason, because of the stickiness, because I have to get new checks for the few checks that I have to write, I have to change the account numbers, I have to change direct deposits, whatever these different pieces are, I don't do it. So I live in this situation where I'm still cutting checks. Now, they've made it easier because I could take a picture of the check and send it. But it would be easier to do it with mouse clicks. And maybe at some point after listening back to this podcast today, maybe it'll motivate me to consolidate and finally get rid of that one joint checking and put it into the other institution where we have all our banking. But then it comes down to risk. And I know it's not a huge risk, but putting your eggs in one basket. And I'm not talking about the monetary risk, but more around the risk of access, right? So if all your money is in one institution and something happens to that institution, yes, you'll get your money. Everything's FDIC insured and all those different pieces. But access to it. What if something happens and you need that money? So we always, especially after 2008, when banks were collapsing into each other and the mortgage crisis and you had small and independent banks being closed, we thought at the time it would be better to have diverse accounts in different institutions. And I think that still holds when it comes to access. I don't think you'll ever lose your money, but getting access to the money, if it's all in one spot, is probably not healthy either. That's why we maintain different accounts in different places, and we live with these inconveniences of having to cut checks to each other rather than logically clicking a button and transferring the money. Because at the end of the day, it's got to cost both banks more money to process those two stupid checks than to allow me to do an interbank transfer.
No doubt. I mean, it's so much of banking is automated now, and it's terrifically convenient. I mean, I love the fact that I can go on my laptop and do what I've got to do financially, just to keep everything humming, so then I don't have to make a trip or think about it or anything like that. But yeah, it comes down to how much does it cost the bank to keep the customer versus how much does it cost them to lose the customer.
Yeah, and at the end of the day, it seems that they don't mind losing the customer. for the most part.
Yep. Yeah, for the most part. No, there are 50 people in line behind you.
Absolutely.
Sucker born every minute.
Well, with that, I guess on an angry summary recap, maybe not so angry. It's all in good fun, right? So to really recap this episode, you've heard a lot of the pitfalls that we've both made. And really, I think for me, the key takeaways are you need to ask the questions, and you have to be your own financial advocate. And triple check paperwork, triple check with people, with bank managers, on the websites, whatever you need to do to make sure you're completely comfortable with the rules of engagement with that bank. And then the next piece is read and reread any of the fine print. I know it's painful. Like you said before, Jody, that 6-point font. Pull out the magnifying glass, give it a read, at least glance it, make sure you understand it so you can make intelligible decisions about your money and not fall into these pitfalls. Anything to add, Jody?
You said it, Paul. I just would add being intentional with your money, being intentional with the decisions that you make will really help you. If you develop that habit of being intentional, you will make fewer mistakes. Don't think you're not going to make none. But as you go through life, you should be making fewer and fewer mistakes. And that starts by being intentional with your money.
Absolutely. Perfectly put. And I think we got through this whole episode without any garage doors opening. So I think that was a good thing. And no kid interruptions, right? So I guess on that note, Jody, I thoroughly enjoyed our discussion today, and I'm personally looking forward to the next one. Thanks, everyone, for downloading our podcast. If you have any questions or comments, please email us at financialdads@gmail.com or check us out on Facebook. Just go to financialdads.com. So with that, this is Paul and Jody reminding you, managing finances can be stressful. That's why the Financial Dads are here to help you plan for success. Have a good one, everybody. Be well, and thank you.